I tested this new technical indicator for a day trading strategy, and the results really shocked me. First step, we're going to add the technical indicator that we'll be using for this strategy. You add this one. We're going to go into the settings and make a few changes. Here, you can leave it as it is. Here, we're going to write 25. Here, we write 1.4. Here, we delete it, write 49, and then confirm. I'm on a 15-minute time frame on the euro dollar, and basically this technical indicator will give you your buy and sell signals. I'm going to give you some live examples so that you can understand the strategy perfectly. You can see that the technical indicator has just given us a buy signal right here. It's interesting because the candle giving the signal is this bullish Marubozu, and you can see it's coming back up to the level of the start of this bearish impulse candle. When the indicator gives you the buy signal, it absolutely must be on a bullish candle, otherwise you don't take the trade. At the close of this signal on the 15-minute time frame, we can buy. We have the entry price right here. The stop loss, you put it under the impulse candle, and we're aiming for a risk reward of 2 times. I'll let the Japanese candlesticks play out and wait for either the stop loss or the target. You can see that the market has just reached its target right here. That's a nice first trade, and to prove to you it's not just luck, we'll follow the next 4 to 5 signals from the technical indicator. We can see that the technical indicator is giving us a sell signal. It's true that the candle looks great. You can see that the market left a long wick behind it with no wick at the bottom. It's really a bearish impulse candle that shows a signal of selling strength and also demonstrates that the market isn't ready to break above this price zone. So you have a strong resistance right here. You can confidently sell the market at the close of the bearish candle right here. You put the stop loss just above the wick. And just like before, we're looking for a risk reward of 2 times. We'll let the Japanese candlesticks play out. And we see that the target has just been reached for the second time in a row. That's an excellent trade. You can see that the market went straight south. And a few hours later, in day trading, you have your target. I'll let the Japanese candlesticks play out and wait for the next signal. We can see that we have the third signal given by the technical indicator right here. A buy signal on this bullish candle on the 15-minute time frame. We buy at the close of the candle, we put the stop loss under the 15-minute wicks here, and a risk reward of 2 times as before. You can see that the third trade is a success. The market has just reached the target. I'll let the Japanese candlesticks play out, and we'll wait for a 4th signal from the technical indicator to test it. We can see that we have a great signal right here. It's precisely this 15-minute candle that's giving the signal. This signal is interesting because we've just broken a bullish trend line to the downside, and you can see that following that, the market drops a bit, and the technical indicator gives a sell signal. Entry price at the candle's close. We'll set the stop loss just above the wicks and a risk reward of 2. So you see that the market, 1 hour after taking the sell, hits the target here. We let the market run and wait for the next signal. We can see this beautiful bullish signal here with a huge 15-minute bullish candle. This candle clearly breaks the bearish trend that had been in place since the sell signal. And even though it's a large candle, we have no choice but to wait for its close to buy. We place the stop loss just below the bullish impulse candle. And as before, we're looking for a risk reward of 2.